Welcome back to another edition of This Week in 3 Minutes. I've called this one SDR Gold Peg, ? So some of you out there are concerned with what's been going on with the price of gold as of late. Yes, it's had a little weakening, but it is still well within its long-term trend. Since December 2015, it's been above this channel. And even though short-term, maybe it's broken down a little bit, it's still above the long-term trend. So I don't see any major change in the price direction of gold until we break out of this long-term trend sometime probably in July. And the catalyst for that, I think we can look at what happened this week and what's likely to happen in the coming weeks. And what I'm talking about, of course, is Russia selling off 50% of its U.S. Treasury position. That's $50 billion of U.S. Treasuries dumped into the open market in exchange for, guess what? Gold. You got it. The Russians are moving out of U.S. Treasuries into gold. Why? Well, they claim it's for greater diversification, and because as interest rates rise, the yields rise in the bond, their current bond holdings become worth less. So they're selling them off because they see a rising rate environment making their bonds worth less. So that's what you do. You sell when things are looking like they're going to break down. So who else is likely to do it? Well, probably many countries, but of course, in particular, I'm referring to China. China being the largest holder of U.S. debt at somewhere in around $1.3 trillion. If they did something similar, that would wreak havoc in the markets. It is the nuclear bomb option, if you will, for China to respond to what's going on right now. Of course, I'm not just talking about the tariffs and trade skirmishes and all that, but it's actually amping up. The media, the mainstream media now is going on and on about how China is really the threat to America, not Russia. And what they decide to do next remains to be seen. But these things rarely end well, and this escalation is most likely going to be the Chinese dumping a sizable portion of their treasuries into the marketplace in exchange for gold. And as that, of course, plays out, we're going to see a dramatic move upwards in the price of gold as demand increases at an institutional level. So hang on your hats. I think the fall is going to be really exciting for the price of gold, and who knows what's going to happen in the bond market, but we shall see. Finally, I'll bring you to the last kind of most interesting point, actually second last. The SDR, which many of you have heard of or studied, is this trade settlement mechanism or tool that IMF members use amongst themselves. You or I can't use it. What I didn't know until this week, and I'll keep my source anonymous for the time being, is that since the Chinese currency was introduced to that basket of currencies called the SDR, the gold price has been absolutely flat and locked down to 900 SDRs. Basically, that gold price hasn't moved in SDR terms. And I don't know exactly what that implies or what that means, but this is really intriguing. It actually suggests that we've been on some sort of gold standard since October of 2016. So we'll be diving into this in greater detail and hopefully be able to share with you who it is that's really the expert on this. But keep your eyes open for this subject. This is one that when it breaks big, it's going to be really, really interesting. And I'll close out with an interesting thing that happened this week, which was General Electric is no longer part of the Dow. If you're not familiar with how an index works or the Dow works, in particular, there's 30 companies on the Dow. That index has existed for many, many years. GE's bit was on there for 111 years. But if you go back 111 years, those companies that were there then are not on the index anymore. They've all been substituted with a new company, giving the illusion that the index is much more stable than in fact it really is. If you had those 111 companies from 111 years ago, many of them don't even exist today. So this is very different than gold as a form of savings in that there is no replacement for gold. So substitution is not something you need to worry about with gold. It cannot be substituted. And on that note, I'll say have a great weekend, and we'll see you next Friday.